You guys introduce yourselves briefly, and then we'll get right into the thick of things.
Cool. I'm Richard Titus, a serial entrepreneur. I've started over 17 companies and made over 100 angel investments in my career. I'm the managing partner of ARC, which is both an investment firm, a venture capital firm, and a capital markets business.
Hello, everyone. My name is Ruslan Gavrilyuk. I'm actually co-founder and president of Taas Group. This is the hybrid model of the fund that is investing in ICOs and actually does daily trading.
Hi, everyone. My name is Smyrniotis. I'm a managing partner and director at Victory Square Technologies. We're an emerging technology accelerator. We've raised more $100 million recently. We've worked with over 1,000 entrepreneurs. We've generated the first world's blockchain company in the capital markets. We've generated a ton of ROI. It's nice to be here.
Hi, I'm Yacine, founder of StartupToken. StartupToken is an accelerator that helps entrepreneurs to go through the process of raising a fund through tokens in a compliant way. And I think we are here shaping this new industry, and I'm really thrilled to be here and talk about the most interesting panel, I think, of the day. Investing in ICOs.
This might be the most interesting panel. I mean, regulation was pretty good. But let's talk about investing. The market has changed considerably. Without looking at the past, what are we looking at when we invest in an ICO now or security token?
I'll jump in because I guess pitched about this earlier. So not looking at the past, but looking forward, I can only look at the past and say that the last 2 quarters have seen more ICO investment than all of 2017. And I can't speak for everyone in this room, but my order books are full for great projects that want to get allocations and for compelling projects that actually need funding to actually change and transform the industries at large. I mean, make your money, but make your money supporting projects that are going to kick ass.
So when we talk about that, before we talk about what we're looking for in investing,
sure,
what the current market looks like. So looking at the future, looks at what it is now.
Well, so it's interesting. I've been investing in crypto, if you will, both equity and tokens for the last 2 years. And when I originally was investing in companies, I would invest in equity. The founders would scratch their heads and say, yeah, sure, you can have some equity. Why do you want it? Now in the Valley, for instance, most investors are looking for equity, which they want to convert into security tokens at a later date. Some of that's because of custody issues and things like this, but we are seeing a sort of normalization, I think a maturation of the market, where we're starting to work out what this new asset class looks like, how it's governed, how it works, and how people make money from it. I think there's a lot of noise about the decline of the crypto market, but that's only true if you got in December 31st last year. If you got in when I did 3 years ago, this is all up.
The industry is growing tremendously.
Right.
Your opinion, Ruslan, about the ICO market now, are we at the tail end of the ICO craze, or are we just getting started with some other version, which is security tokens or equity fundraising?
Yeah, we've been in this industry for a while. I guess within the last 1.5 years, we have screened and analyzed more than 1,000 projects. We wish that there were much more better projects, but we have contributed, if I'm not mistaken, to 40 projects. Right now we see the real change, not about the ICO themselves, because we hear so many talks, ICO is dead or not dead. I guess it's evolutionized and transformed to some other area. We see the hybrid models of selling some added value in the form of utility tokens and some real assets in the form of security tokens. But we haven't talked about commodity tokens or some other tokens as well.
Okay.
So when we are talking about tokens, we are talking a kind of derivatives, actually, to the real class assets. So we're going to witness, I guess, tremendous change in this field within the next year, 2 years, 5 years. And we're going to talk about the huge market, the market that is not public, the market is that the people have limited access to, and when the institutional players could come into the game, can do the investments when the infrastructure is properly prepared for them.
Yacine, thoughts on this?
Yeah, I know you're trying to kill the utility token because you always switch to security token, but I really want to say that I think we are just at the beginning. There are so much projects to build, so many people that want to be part of this game of exchanging value without borders, without any permissions. I mean, we have supported a dozen of projects, and we're so proud to see them delivering, giving access to crypto. We have a project that just went mainnet. It's called Dieter. Dieter enable anybody to buy crypto with cash. You see that? I mean, they unlocked the platform, which switched mainnet. There are like 30,000 people that want to open a point of sale and sell crypto. And this has been funded by a utility token. The model is viable, and it wouldn't have happened with the venture capital or like I can't imagine those guys presenting the project to a banker and say like, yeah, we're going to build something based on decentralization, community, etc. Utility token have a long life, and they will enable tremendous project. It was last year was insane. We had fun. Party's over. Let's build something that is sustainable, and I think we're here for that.
Let's have some patience, right?
Yeah. It's not like I click one time and I do a 10x.
I want to clarify. I'm not opposed to utility tokens. I think utility tokens were the sharp end of an innovation pyramid. And we're now starting to see, as Ruslan said, an expansion into a massive diversity of tokenization projects, which have an array of ways of rewarding investors. So to me, utility tokens were the beginning. Without them, none of this happens. But I'm excited to see different kinds of instruments which help companies and capital connect to each other.
It's an example of that. I mean, the end game is the divisibility of all assets and services.
Yeah.
That's the end game. So you're right, the elasticity of our perspective as investors and our perspective as operators, as entrepreneurs, we have a mandate to ultimately define what is the best way to raise capital for which project. And if it's a new path we have to blaze, or as one of my colleagues likes to say, we have to build the plane while we're flying it to figure that out, then we build the plane while we fly it. Seek counsel from the best minds in the business, make sure they know what they're qualified to talk about, embrace the horror that you'll deal with regulators. They're just like people. They eat food, they sleep, apparently. You can talk to them. They're not your enemies. They're trying to figure this out too to protect investors. So make a friend. Get to know them. Share a glass of wine with a regulator. They'll help you further along than you might imagine. And ultimately, Mo's not wrong. He has been subtexting the security token thing for quite some time now, but I imagine a blended future, and he's not, I think you're right on, Mo.
I think we're going to see a hybrid of something, and we're all learning this together. And what happens next year or 2 years, we don't know what sort of token there will be. Let's talk about valuations for a second.
I think the days of 4 smart kids with a white paper, not even a deck, and a $100 million raise are over. Thank God.
I was at a tech conference in Amsterdam last month. And there was one blockchain company there. All the other companies are trying to raise $100,000, $200,000. And they would be pleased and have a team and a working product and great stuff. And then I talked to the blockchain project, $30 million, what do you have? Well, we had a team meeting, we decided it's a good idea. Let's talk about valuations. 100 millions without a white paper, probably over. What is the valuation of some security tokens? How are we going to value these projects or commodity tokens or a hybrid of these? And how do you value equity when you look at that to invest in a company?
You can do valuation however you want. Yeah, this is what is happening right now. That just people like, okay, I need 100 million, so this is the valuation of the company. That happens very often. If you start doing the due diligence, and our due diligence is really intensive, we have about like 65 or 70 points criteria to do the due diligence. And when it goes to security tokens, we are not allowed right now to invest in security tokens, but nevertheless, it can be much more extensive, this due diligence. The valuation is actually what we see right now. This is what market setups, yeah? This is what the community, how the community reacts, and these are the benchmarks right now for the market. Unfortunately, or luckily, but we will see the fair valuation quite soon, I guess, when the market will become more regulated, when we'll see less wash trading or less manipulations on the exchanges with the volume price, and with the volumes, with the prices, etc.
Valuation, I think it's a very difficult topic. Today, we can't talk really about valuation as long as we are in a supply market as today. We're like, there are billions of tokens created every day. How many people are using these tokens? Okay, to define the size of the market, to define the valuation, proper valuation of company, it's when the adoption will be a bit more mainstream. I think we are not working enough on educating people, on creating, more content about what is this token for. We talk about protocols, ERC20, blah, 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 but we need to talk simple words. Who wants to monetize its skills? Okay, buy this token. You're going to monetize your skills. Who wants, I don't know, to have access to, monetize their storage? Use this token. There are so many applications, and we're not enough speaking simple language to the people. So we need to educate the market. We need to turn all these guys into users, really help the adoption. And then we will see the size of the market, and we will talk valuation. Today, people are just dropping numbers. How can we, say that, no, you're wrong. Your valuation would be this or that. The market decides.
He's not wrong. You
Thank
mentioned the valley. You mentioned the valley earlier, and transparently, I'm kind of wear two hats in this conversation. One, being in my 40s, I'm just old enough to remember pets.com, right? Just for those of you who don't know pets.com, you can look that up. I see some seasoned investors smirking. It's a horror story, and it was the canary in the coal mine that took out the entire dot-com era, leading to the dot-com bust. I mean, that was it. That was party over. Critical mass, and it ended. So transparently, forgive my bluntness, but what is the valuation of a company? It's whatever you can distill, compel, and proof with a respective investor. And the reality is you'll find investors who are going to believe in the project, the market opportunity, the scale. And you'll find investors who want the trade because the instant liquidity of what crypto provides is powerful. Fundamentally, startups have a new mechanism in the last 3 years to go public through a blockchain-enabled thesis. And that's the reality of the situation. So should you have a higher valuation because you're giving early-stage investors the ability to gain liquidity? Yeah, maybe. But transparently, as an investor, as an entrepreneur, as someone who runs and supports ICO organizations, each conversation warrants that specific question. How do you make money? How do your investors make money? Answer those two questions, be transparent, solve those problems, and build what you want to build. And the market will tell you what you're worth. You'll know because your checkbook or check pile will be empty or full.
And supply. Yeah.
Absolutely.
That's it.
We don't use checkbooks anymore.
I'm sorry, as I said, I'm 40. My apologies.
All right, so understanding this, there's a new variable out there that besides for revenues, there's this multiplier based on FOMO and craze. The companies that are earning the boy band money over the last 12 months are the exchanges, they're the mining companies, they're the major protocols, and they're the forks that work. What sort of trends are you guys looking at? Companies that you think are going to be the most successful going forward? Are they smaller companies working on exchanges and trying to compete in that market? What sort of trends are you looking for?
That depends very much on the company, on the product, on the team, on the vision. So many factors, actually. You cannot say this protocol will succeed or that protocol will succeed. What the industry we are observing is lack of is actually after ICO, many people think that ICO, this is everything, right? You've done your job. But what about the product? What about the delivering this product? And there are so little instruments, instruments actually how you can follow the further development, how people are reporting, this company reporting to the investors, to the public, what they do, what their liabilities are. Seems like all of a sudden they all forget about this. This is not obligatory. Just wait 2 years, we're going to perform something. Yeah, but this is not fair. So, and the second thing is about the management, the funds, after ICO. We have witnessed actually so many companies have reduced their capital because of they didn't have any fund manager or they didn't give their funds to the professionals to manage their funds, to perform better or even in the form of treasury. That's why some of the companies raise 40 million in Ether. Right now they have 5 or 10 million Ether. And did anybody ask a question? Is it enough for them to develop and deliver the product? So the main concern is management of the funds and reporting what the guys are doing.
So it's interesting. So there's a corollary here of, I had 2 investments this year and last year. One of them raised $30 million, which is now 15, and one of them raised $8 million, which is now 40.
They have good balance. Yeah?
Right. And what's interesting is, it's just market timing, right? But it reminds me of back when I founded one of these .com companies you're talking about. I was one of the founders of Razorfish. So Razorfish at its peak was worth $3.5 billion. And I would argue that now, they just retired the brand Razorfish, but the Publicis agency with that name on it has just achieved, again, a $3.5 billion market cap valuation. Right? So frothy excitement is not something new that just came with crypto. This is something that's existed for a long time. The difference is the successful companies are the ones who manage that market volatility. And so what we look for are businesses that are really successful businesses. I'm looking at energy, I'm looking at trading, I'm looking at protocols. Things that are necessary to take the market to the next place, whatever market they're in. To me, blockchain reminds me a lot of the internet back in the day, where we didn't call things internet businesses. That was a crazy idea. Every business is an internet business. I'm focused on innovation and leading in things that change the world, where the blockchain is an integral part of a change program that was going to happen anyways.
Yeah, that's really interesting that the entrepreneurs that are joining the space, the crypto space, when you want to do, people were saying, it's very easy to do an ICO, just press on a button, publish an Ether address, and collect the money. But the number of skills you need to learn now as a CEO that is involved in the crypto space that has a token, we see that you were mentioning the example of like the valuation of their assets went down, went up. I mean, when you were in the traditional world, you raise your money, you raise it in pounds. Okay, it fluctuates maybe a little bit depending on Brexit, but maybe wrong example, euro. So it's stable. Here in crypto, like entrepreneurs, they need to, there are so many skills that they need to learn. How they organize, how they manage an organization, a decentralized organization. Like on slides, it's so pretty, those big, marketing terms, but in reality, I mean, I see all the CEOs we have helped that now they're stressed, they have their Telegram beeping like 10,000 times per second, and like how they manage the team, etc. There are new, it's a new model of, like the firm has changed, it's a new model of company management. It's very exciting, but it's very, very challenging. And this new generation will shape the new way of creating business, sharing value, and managing organizations.
Just a quick little caveat on that, and I agree with what you shared, but in the first .com era, we had every company hitting its mark or exceeding its mark and promising the moon, but they were all liquid. They were all going public, and they provided investors at least an escape mechanism to gain liquidity. Crypto, by proxy and by nature, is a liquid mechanism.
Right.
So, most companies that are not blockchain or crypto enabled are private. The Ubers, the Airbnbs, they're not listed, they're not running there. So if you're a management team, a CEO, a co-founder, and you're taking a company through a crypto activity, you don't have to blow your brains out to figure out how to play this book. Jeff Bezos figured this out at a desk, right? Everyone needs good mentorship. I'm sure everyone at this booth, with the exception of Mo, because he's at the top, will tell us that, thank you Mo, will tell us that we all need good mentors. We all need good people to give us the guidance we need. If you're running a crypto activity and you don't have a colleague or a friend who's taken a company public or has run an ICO successfully before, you're going to fall on your face and you're going to take your team and your investors with you. And that's okay, because if you have enough money in the bank, you can dust yourself off and you should find counsel. If your advisors are just blockchain, crypto, domain experts, it's not enough. You need people who understand how markets work, how game theory works, and you need to take your ego and stick it under your chair and recognize that you're not going to be right about everything, and a lot of your assumptions are going to get shot in the face. And that's okay too. So I hope that helps.
We talked about this in the regulation panel about jurisdictions and countries which are,
Shopping.
Shopping.
I called it a buffet. Any thoughts on where we're headed in terms of companies domiciling, registering in a jurisdiction? I know you've spent a ton of time in Gibraltar.
I mean, I think it was clear we're all going to end up in Bermuda, no?
Malta.
Presentation was quite appealing. Like in terms of jurisdiction, yeah, I think it's a great opportunity for all those small jurisdictions because they are, they see blockchain as a great leverage. They're attracting entrepreneurs, and this is great because there will be like kind of sandbox, those nimble jurisdictions. We are closely working with Gibraltar, for example, and Gibraltar has, the whole regulators, lawyers, bankers, everybody stand in one office almost, and it's very easy to go and speak to one and the other and have advices and those jurisdictions are, really helping the industry, taking a little bit advantage of it. I don't know how it's down the line, what will happen, but like Malta, Gibraltar, Singapore, they are really open, creating the dialogue, and they're helping entrepreneurs. So this is cool. And then it will be applied to bigger jurisdictions, and we'll see. But in terms of regulation, I'm really curious what will be the story, because I'm quite, I don't know, skeptic about creating like rules for such a powerful technology that has, borders is meaningless in this industry. So we talk, regulators are deciding, inviting people. The dialogue is here. But in reality, whatever regulation will come up, this technology is way ahead. And unless one state create a wallet address and say, okay, we're collecting taxes, it's 1%, and every transaction, feed this wallet, I don't know how they're gonna onboard the system, onboard this technology.
Yeah, I absolutely agree with you. About Gibraltar, it's really easy to sort it out there. Everybody in the same building, right? So all the regulators, the prime minister, or whoever is, all the ministers, members of the parliament, they're making a great move towards. We have been working with a couple of jurisdictions. What we have noticed all over the world, the most difficult for regulators to define what is cryptocurrency and to start from there, whether it is commodity, whether it is financial instrument, or whether it is derivative or whatever else. After that, you have all the regulations in place, all the rules in place. But what you are lack of couple instruments, how you're gonna validate the transactions, how you're gonna monitor these transactions, and so on and so forth. Where is the depository? Where is the custodian? Who's gonna take care of this? Who's gonna bear the responsibility? And I think that we have plenty of blockchain companies, protocols, providers. I guess this is the first move they should do, is actually provide these solutions to the regulators to make their life easier, to pay taxes, to report, etc. And nobody has any problems.
So I think anyone who's read my blog knows that I've had some conversations with regulators over the last 2 years. And I'm going to come at it from a different angle. I think there's lots of jurisdictions, Malta, Gibraltar, Estonia, Singapore, who've been really progressive in embracing the wave of change. And companies who embrace, countries, companies, software, it's all the same to me. People who embrace transformational change early often win. What worries me as a US citizen and someone who lives in San Francisco is I don't see us embracing this change as quickly as everyone else. Now, I will say we had this framework around Reg A, Reg D, Reg S that we sort of are trying to squeeze security tokens into, and maybe that will work and be fine, but on a broader level, I see some of the best companies from my country leaving.
Yeah.
That capital's leaving, that means the jobs are leaving, that means the innovation is leaving, and this is bad for my home country and fantastic for the rest of the world, where there's a flowering. When I look at my portfolio, more than half these companies are not US domiciled or even US based. And in Sand Hill Road, that's never the case. Maybe there's 1 in 100 that are based outside the US. So I think this is a really fascinating concept. This jurisdiction domicile thing is just the thin end of the wedge that's distributing this wave of transformational change much broader than the last three.
My only 2 cents on this to my American cousin as a Canadian, it's very easy on this. I look in this room, we're in England, we're talking Brexit. If anybody here thinks the city is going to go quietly into the night and not embrace crypto to weaponize its future, you're crazy. Yeah. They have money, they have resources, they have the entire city of London is engineered to make money on transactions. So, you know, hold on to your suits and your pants and your money because it's going to happen. That's it. Past that, England's part of the G7, G6, G8, G20. They love Gs. The important part of that as a product is, it's very simple. America is the boogeyman and the enabler. It's the capital pool and the clause in the contract that makes you scratch your head. Respectfully, as a Canadian, we're a gateway drug on both sides of the pond. So, you know, we get to play both sides and see how it goes. And we have a number of American companies come to Canada to kind of figure out what to do about that before they make that decision. So I think once we crack, I mean, respectfully, if you get England and Canada on board, America's just going to like fall in line. They have to, because it's simple. You're going to miss the biggest party in the world, and everyone else is just going to be like, see ya. And that's okay. And that's okay because the reality is generations change. I see people in their 20s, 30s, and 40s here, and they're adopters, and we are the early adopters. I mean, this is what, 8 to 10 years in with a 3-year component on crypto. So to answer your question, Mo, I would say you're going to see a aggregation of the G20 nations in the next 24 months. Just line up, apply these regulations, and let us do our jobs.
Positive note. I think we have 3 minutes left, so I don't know if we should stop here or one more question.
Let's do one more.
One more question. That's good, though.
It's really good.
I like that. Venture capital, traditional investing, group of people saying, we'll take 10% of your company because we know a couple people to introduce you to. Is that dead? Is it going to be dead? Have we discovered the funding mechanism to kill venture capital?
No, I'm not sure. Yeah.
It's funny. I'm going to actually speak to this because I came here from a meeting with some, and I'm not going to name them, some very well-known venture capitalists. Probably half the people in this room know them. And we spent an hour, half of it discussing the portfolio company I was with, and half of it talking about whether security tokens were a mechanism that they could invest in or even wanted to invest in, and why. And what I was struck by is that everyone in the room, I said this statement just to be provocative. I said, look, in 5 years, all equity will be digital securities. There will be no securities that are not digital securities in 5 years. If you don't believe that, let's have an argument on the back. But if you believe that, and you know where we are now is the beginning, why would you not want to be in the new way versus the old way? I found that to be a really interesting puzzle, that venture capital in many ways was a gatekeeper on a ferry where someone's building a bridge.
Yeah, just before VC had really huge amounts of dry powder, and they couldn't deploy the capital. Right now, we are evolutionizing towards tokenized or digitalized assets. That means they will not get huge stake like before, but they will get the liquid stake. And they will have much more projects to invest in and even to tokenize their interest, tokenize their portfolio, and sell it to the other company partially or in the whole. I guess they will benefit as well from this situation.
Venture capital. Oh my God. I come from this world, actually. I was working with one very early investor in the space, Consilium, if everybody, I think everybody knows them. They prepared the path for like the tokens. They have an interesting model, actually. They invest in equity. It enables at the early stage for the blockchain startup to acquire the community. So it enables to, because it becomes more and more expensive to do an ICO. It has never been cheap, actually. But VCs have a role in this space. Now they're turning more as advisors for a bunch of projects, because you can be like 20 years old and you find yourself with $20 million in your wallet, you need some kind of senior experience to come and guide you.
Not to get mad, yeah.
With that, and without any more time, please join me in thanking our panelists for being on stage and talking about investing in ICOs.
Thank you.